Hey, what's up, everybody? It is Pete. Welcome to this episode of Stocks for Breakfast. It is Wednesday morning, March 4th, 2020. And today we are going to talk about day trading and specifically this amazing market we have right now if you're a full-time active day trader. And I want to make it clear, I'm talking about somebody who's a full-time trader who could be at the screen, hitting the keys, banging away, and making quick decisions. This is like trading in 1999, way back in the day, 99, 2000, up to 2003, when there were 50-point swings in stocks on a regular basis. It is an amazing market right now for full-time day traders. Had a long conversation with somebody yesterday afternoon asking me about the bigger picture. I'm going to be honest with you, I don't know if anybody has an idea about the bigger picture. There's so much uncertainty about the coronavirus right now that it's impossible for anybody to have, because nobody has the answer. Let's get that clear. Nobody has the answer to predict when it's going to be cured, if and obviously when it's going to be cured, and what that's going to do to prices. All we're doing right now is the market is reacting to daily, everyday headlines, which is just phenomenal for people who are day trading. You are getting unbelievable volume, volatility, back and forth price action. So what I'm going to do today, because I had this long conversation with somebody yesterday and we got off the let's predict what's going to happen or forecast what's going to happen in the long term. Today we're going to talk about, I'm going to review the charts that are in my universe that I normally trade all the time, and from an intraday perspective, and breaking down, and seeing where and what we would have done if we would have done anything. We're going to use 2-day charts. I'm going to alternate between the hourly, the 15, and the 5, and I think it'll be kind of a really fun exercise in finding good opportunities. But first, we're going to go over to the charts. We're going to go over to a little bit of news, stuff that's in the headlines today. Obviously, yesterday's Super Tuesday, the Fed cut, surprise Fed cut. So let's hop on over there and look at that stuff first before we get in. So obviously, yesterday was Super Tuesday. Joe Biden had what many of people are considering a historic comeback. He was down in a lot of the polls. Obviously, about a week and a half ago, it looked like he might have been out of it. The futures are exploding this morning. We'll take a look on the charts, exactly what that means. This headline over here is a little bit nutty. I don't know if there's any other way. Market rout didn't force the U.S. rate cut. What, are you kidding me? Of course it did. What is that? I don't get that. Anyway, so up 550 points. We're going to take a look. We've had some conversations recently about setting horizontal boxes pre-market, even if you're not trading pre-market, which I personally do not recommend anybody trades pre-market without a lot of experience. The liquidity is just not there. It can be a guess, quite honestly, for somebody who has never traded full-time and is not sitting at that screen, especially if you're not sitting in front of your screen with a level 2 box where you can see the inside bid and offer, and more importantly, the depth of that inside bid and offer. And we actually have a really good video about understanding bid offer quotes. We have a tutorial on it. I'll post that link below the video. Oh, by the way, if you enjoyed today's video, please make sure you subscribe to the channel and click alerts. This way you get updates on future videos. I'm actually going to be doing a few trading lesson videos coming up soon, so you want to make sure that you get those. So you can see this blue line here is where we actually closed in the regular trading hours yesterday afternoon on Tuesday. And we actually had a sell-off, but we tested the previous day's low. And this is actually something that you absolutely need to be paying attention to, a failed test of previous day's lows and how prices react off of that. Generally speaking, the first bounce off of that is important, but here's what's amazing. If you had the line drawn for yesterday's close of regular trading hours, you would obviously know this should have came in as support. It did, and we're having a nice, slow, grinding move higher. Whether it's Super Tuesday, whether it's the rate cut, whether it's just an oversold market that doesn't have any stronger negative news, I don't know. And what I mean by that is this year, coronavirus spread slows drastically, but that remains, and it's not slowing down in the rest of the world yet. So again, this could be one of the reasons. Nobody knows. You can see this is 3 o'clock in the morning. One other thing to note is Tesla registrations plunged. Obviously, this stock is volatile. Obviously, the stock is just amazing to be day trading right now with the multiple dollar swings intraday. I don't recommend somebody picking this stock for a swing trade right now. We'll go over to the chart in a second, but it's all over the place, and I'll explain why. The theme of today is going to be day trading. There's really no other way to put it. Tesla, typing it in wrong. And we're going to go back out to the daily charts. So you can see here, there's really no consistency from one day to the next. So believing that you're going to swing trade this based on technical patterns, that's a little far-fetched right now, because we're getting opposite bullish bearish days without any rhyme or reason to it. The best kind of market is we get a nice fluid up a few days, pulls back, closes on the lows, you bid the lows, and you look for the next day. We're not seeing that. As a matter of fact, this is the very definition of distribution, where you get these wide, really wide swings. And actually, you know what? I'm going to pull it up on the screen right now. Let's see. Let me see if I can find it. You know what? I'll put the link below. I'll put the link below the video. We have a really good, what do you call it? I'm drawing a blank here. We have a really good article on understanding order flow and accumulation distribution. We also just did a podcast on it recently. I'll actually post a link to the podcast. We essentially walk through accumulation to markup to distribution to markdown, and it walks through all of the 4 phases of price action that the smart money do. So you can actually see what they're doing to get a head start on forecasting what should happen next. It's really eye-opening. So what I'm going to do then, I'm going to just talk about a couple of stocks. We've had Etsy in the list for a few days, and you can see why it actually bounced back up to this resistance level again. Just over 70 is the next level. So what we've said and what we've been looking for is a close for a couple of days above 60. You can see we keep hitting 60, but we can't get above it. So I want to make clear, there's nothing to do yet. You don't want to get caught in this choppiness. You don't want to have a buy stop order up there, because you'll get filled, pulls back, filled, pulls back. Your alert should probably be up somewhere around $60.50, maybe even 61. Let it get above there. Let it close there for a couple of days on the daily chart to prove the buyers can hold it above that level, and then 70 is the next level. Again, it's not triggering, but this is what professional trading is all about. This is what disciplined, even if you're not a professional trader, this is what real trading is about. Set your alerts, know your levels, and if the stock gets there, you take decisive action because you planned for doing something. Next, I want to take a look at something that's not necessarily a perfect trade, but prior to the coronavirus breaking out, American Express was doing very well and hitting 52-week highs, if not longer, multi-year highs. Because of what it was doing, this is something we're going to have to keep an eye on over the next couple of weeks, of stocks that were at or near 52-week highs prior to this. We need to start looking for them to start showing a significant increase in volume, and then probably the best case scenario, a pause, kind of like going sideways for 3 to 5 days, maybe even a little longer than that, but no significant price action. Remember what I just discussed, accumulation? That's what that would look like, where we see a pause in the price action on heavy volume. Generally speaking, that's accumulation. And in this case here, we would see it rally. So this is one that I'm looking for to continue to see this spike in price action. Next one I want to talk about is Newmont Mining, which actually has had, let me get the volume off the screen there, has actually had 3 super bullish days in a row. And we tried to break through 51, we couldn't. But this is the kind of price action that you want to see if you want to have a conversation about what do you think is going to happen next. This is a really solid bullish action. We had a gap, we held the gap, we closed on the highs 3 days in a row. It looks like we tried to get above 51 and we couldn't. So now 51 is the line in the sand, and I'm going to zoom that out a little bit. You can see how significant this is, right? Going all the way back years. So if we get above 51, we got some minor resistance here at 57. Then we're looking at 70. But again, very similar to what we were talking about yesterday. Getting long versus getting long at the right time is very different scenarios. And that's what separates somebody whose account grows blazingly fast versus somebody whose account just stays flat as a board. This is a long. It's not a long right now after the stock has gone from 42 to 51 in 3 days. So you need to know the average true range. You need to know how much the stock normally travels, which is a big part of yesterday's video. So click back and watch that one, and it'll walk you through what are the odds of follow through and should you accept that risk. I do like this, but very similar to Etsy, I want to see it hover and pause near 51. Now in this case here, because it's not such an obvious resistance level like Etsy, I want to see it get up here, pause for a couple of days. Doesn't have to close above 51, but if the pause is up there, then we can look to build a position while it's in the pause, and then look for the next leg up, which we said 57 and then 70. The other one on the opposite side, we have a short sale opportunity today, and I'm looking at Kohl's. You can see Kohl's has some pretty decent room to the downside. We're stuck at this support level right now, which is 37. So we're not looking to short it here. We need to see it get through 35. But what is interesting is if we zoom back out, we have recently talked about consolidations and what happens after a breakdown. We actually did get an inside candlestick here, which we said implies that the breakdown fails because we push through, break down, and fail instead of pushing through and following through. Generally speaking, that will reverse. So we have a couple of different sides here. A short sale below 35, but nothing between here and there now because there's not enough room to go. But if it does find a bid, that 35 is a good bid to lean on. But again, that's not an A plus trade. It's actually a better short sale because of what's going on over the longer term picture. It's just going straight down. So, matter of fact, it's got a 50% haircut since this time last year. And if you missed that language, a haircut means the stock has fallen a certain percentage. That's old school day trading terminology. But I'd rather this on the short side. But again, this is real trading, tape reading versus chart reading. You don't short sell or buy into support or resistance. So on the surface, it looks like a great short sale because it broke down, it's continuing to break down, did not rally with the market the last couple of days. Market had a nice rally and the stock actually closed on the lows, but there is not room to go. One other stock that is, so in other words, it's not a trade because there's no room to go. I want to make that clear. And that's the building an argument, building an argument. What's the argument for the idea? You don't have a great argument here because the reward potential is not there. One I want to talk about that we mentioned again briefly yesterday, Costco actually has earnings tomorrow on Thursday, March 5th. The stock has been volatile with the rest of the market, but if you've gone into a Costco now, they're actually stampeding around those stores. So they might actually have an inventory supply issue coming up soon because if they got rid of everything within the warehouses, but they can't get any new supplies, that's going to be interesting to watch too. So earnings tomorrow, but the big thing to watch with Costco earnings tomorrow is what do they say about guidance based on what's happening? Are they going to have issues with getting new stuff into our warehouses? So as I said, we're gonna finish this video strong, doing a, I guess you would call a lightning round to paraphrase somebody else, on day trading these stocks that are in my list. And I'm going to actually just sort them by alphabetical order. I'm not going to do it by any particular up or down for the day. So generally speaking, what I'll normally do is if we're sitting in our room talking together, we're going to be first looking at, from a very short-term perspective, we're going to go over the hourly charts. And one of the things that we're going to be looking for, first and foremost, we're going to be looking to see, is the current hour red or green? Is the current hour well bid or well offered? So we're just going to use these two candles here and here to illustrate what I mean. So something that's really revolutionary, in my opinion, that we came up with a long time ago, is whether or not a stock has longer term order flow, and then whether or not the current hour is in sync with the longer term order flow. So if you think about it, you come into the day saying, I want to be a buyer or seller. And have you ever came into a day where, and I know I have, I'm sure if you trade for a while you do, you come into the day saying, I want to be a buyer of this stock, but right now it keeps going down. And you're like, when do I buy? When do I buy? When do I buy? I know the stocks are long, when do I buy? This is the way to supercharge your decision making. And again, moving it higher up the chain of moving it towards an A plus trade. If you come into the day wanting to be a buyer, you want to be long, but your hourly candle is still red, you don't do anything. You don't even look for an entry until that hourly candle flashes green. And then you could technically stay long as that candle or the next candle or the next candle continues to be green and continues to be well bid. So in this case here, green and well bid, well bid. So well bid means higher highs, higher lows, higher highs, higher lows. And then we close all the way off the highs there. So basically what happened, you close on the highs, you close off the highs. That's a signal that the buyers tried to push it up and couldn't. You probably drop down to your lower time frames, tighten up the trailing stop. Same thing here on the opposite side. We had red and well offered. One candle, two candles of green. So the whole day in Apple, if you were looking to be bidding, it would be this hour and this hour, and this hour here seems to be the better one. So I want to make it clear, what I just gave you is actually a short-term trading strategy, and you could actually even take it further. So we have the hourly candle, we have the color of the hourly candle, we have whether or not it's well bid, well offered, and what happened during that hour. You can also move it out on the daily chart by now using whether or not it's well bid or well offered on the higher time frame. So let's just really drill this down, and let me come off of the screen here. So you can really drill this down into a strategy. So imagine you're on the monthly chart, you're on the weekly chart, you're on the daily chart, and you're looking just like this. Is my chart well bid? So if you want to be a buyer of that stock, and let's just say with the monthly candle, is it green? Is it green? Is it well bid? Is it well bid? And again, I'm just giving you a tiny fraction of a whole strategy, but I'm giving you the nuts and bolts of how to be a tape reader. Again, is it moving closer to or further away from a different price? And can I make a call with conviction? Well bid on the monthly, well bid on the weekly, well bid on the daily. So you just built a little strategy. You're building an argument that right now it looks like buyers are in charge. And not even looks like, they are, because the candle's green. We're holding higher lows, we're holding higher highs. The support is coming in and holding higher lows and pushing to new highs. Then you break down to the hourly chart. Like, okay, is the current hour matching those higher time frames? Then you break it down to your entry time frame. So if we drop this all the way down to our 15-minute chart, and we're even going to break it down even further than that, as you saw that I do every single day. Here is the high in Apple. So as of right now, in yesterday's chart of Apple, and I'm going to actually zoom out to the higher time frame so we can pull it back. Apple was actually well bid, but if you remember in yesterday's video, I made this super clear. We said being long going into yesterday morning, what do we need to see? We need to see a best case scenario above the open price, above yesterday's high, and above yesterday's close. Three pieces to the argument to determine whether or not we wanted to remain long yesterday or look for new longs. And again, long means you want to be a buyer. Short means you want to be a seller. Get the language. Sound great at a barbecue. All right, so that didn't happen immediately. So immediately your game plan is not unfolding. If you wrote down, if this happens, then I'm doing this, you said, I'm doing nothing, I'm not going to force it. If you want it to be long because the stock was still well bid, now you have a choice. If we go down to the 15-minute time frame, you know it's not your perfect trade because you're not trading above today's open price. You're not trading above yesterday's high. You're not trading above yesterday's close. So as this window unfolds, you are now specifically day trading this stock. There's no longer term situation here. Now, if you want to drop it down to day trading timeframes just in this stock, you would now drop down to the hourly and you would say, okay, the first 2 hours were red. So now we drop down to the 15-minute candle and we're looking for entries on the 15-minute side on the short side. Now, as far as how strong or weak this argument is, the very longer term picture was bullish. The short term picture is chaos. So now you're just trading this micro time frame. We went to, couldn't hold, broke out, failed, below today's open. Current hour is on the short side. I'm going to keep looking for short sales. Less conviction, I shouldn't say, less conviction because you're not building a stronger argument. It only has the micro time frames. And I say relative conviction, less conviction with context, because for a day trader, an active day trader, I've seen day traders, and myself included, back in the day where you're trading a 15-minute chart. So to have the hourly chart on your side for that time frame is conviction. I know that might sound crazy for somebody who's only looking for longer term stuff, but the active traders live in these shorter windows and they have the commission structure and the technology and the skill to be trading in and out of these positions. So giving you kind of a glimpse of what it means to be a professional trader and how somebody can do 50 to 100 trades a day. As we said before, hourly chart, first 2 hours red below the opening price, minimum criteria to start looking for a short. You actually get an inside candle here on the 15-minute chart, which now I hope I beat that into you. I actually did a video on this a couple of days ago. My favorite trading entry as well as my favorite trading signal, because it's a pause in price action that gives us a spot to manage risk. So based on the criteria they're looking at before, we've been looking for a short sale. And we get another one here. If you're in the coaching program, you know that this is a swing high and a bearish U-turn. So the first couple of hours of the day right here and right here are short selling opportunities. And you can even break that down further on the 5-minute chart to see if you can fine tune those entries even more. What's kind of cool here is that if you drew the opening price here and it failed up there and have this inside candle, this actually would be an entry to the short side. So within at 10 o'clock in the morning, this actually would have been the entry price because it met all the other criteria. But how many more videos do I have to do to make you understand how significant the opening price is? Which, by the way, you could do the same exact thing on the weekly charts and on the monthly charts. If you're a longer term trader, I'm showing you the principles on actively day trading stocks, but you can use these same principles on longer time frames and hold the stock for 3 days, a week, a month. It doesn't matter. So like, for argument's sake, if we're looking at Apple here, which is a pretty good example, you can see the stock was well bid for weeks. So one of the top questions I get is, how do I know how long to hold my trade? Well, the first answer is, if the situation has not changed, you hold it. But the question is, what does that mean? What does the situation mean in order to hold it? What am I looking for to say the situation hasn't changed? Well, now you know. It's well bid, higher highs, higher lows, closing near the highs, all the way up till this situation here. So something changed here. And we actually called this on the daily charts. If we go to the daily charts, we started to say that we were seeing more closes below the open, which implies selling up in that area. You can see up here, there was mostly green candles. And then all of a sudden, we started to see that distribution. Now, again, let's take coronavirus out of the equation. We started to see lower closes, meaning red candlesticks, while it was trading near the high. So it was kind of like forecasting a little bit, and it's definitely something to keep an eye on. So that is essentially how you break down a stock from higher time frames, how to use the opening price in multiple time frames, how to use the hourly candle in the opening price to recalibrate whether or not you want to be long or short right now, fully recognizing you're using those micro time frames to make a commitment, and then you drill down even further to time your entries. Now, the last part of the equation is, how do you actually book profits? Well, the same way that you look for entry signals, you look for those same exit signals. Do you see 3 to 5 candles in your direction on your entry time frame? Then you go back to the higher time frame. So let's just say, for argument's sake, let me go to the charts here for a second. Let's just go to the charts and take a look over here. So there's the red candlesticks that I was talking about in Apple. So I'm just going to drop down to these time frames again. So let's just say, for argument's sake, we're looking at a short sale here. Actually, you know what? Let's do it on the 5-minute chart, because that's the point that I was making there. There's the hourly candlestick and the the opening price. This is the opening price yesterday. You can see how price traded the entire day. The opening price is so significant. My point is, if you are short, let's just say, for argument's sake, you're short here between 12 o'clock and 2 o'clock. Then you go to the higher time frames and you look to see whether or not that time frame is showing signs of reversals. And you can see we got 2 bottoming tails here. So you start on the higher time frame, go down to the lower time frame to time your entries, and then go back to the higher time frame to see how long you should hold the trade. So hopefully that gives you a pretty good idea of how to keep digging in to read the charts, keep digging in to learn how to read the tape versus just being a chart reader. Again, chart reader is just looking for patterns. Tape reader is looking for money. How much room is there to go? How stacked is my argument? That's the stuff that makes your account grow blazing fast. My name is Pete Renzulli. I want to thank you so much for attending and watching today's episode of Stocks for Breakfast. Hopefully you're getting some ideas, how to manage those ideas, how to find those ideas, but more importantly, making that leap from chart reader to trader, and really digging in and taking it further than just looking at the setup, which means how to actually make money. If you find these videos helpful, please click down and click subscribe. I will speak to you soon. Have a great day.